Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Wednesday, March 12th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at May corn down 9 cents at 461 1/4. May soybeans were down 9 1/4 at 10.02, and May Chicago wheat was down 2 1/4 at 554 1/2. This morning we had CPI numbers out. Up 0.2%, putting the annual inflation rate at 2.8%. The 12-month core CPI came back at 3.1%. Both numbers were slightly better than expected. The Dow rallied about 300 points on the news. We're currently sitting up about 200 here this morning. Also released this morning, Stats Canada was out with their acreage projections. They've got wheat up 27.5 million acres. That's up 2.6% year over year. Canola was down 1.7%, 21.6 million acres. Soybeans down 1.3% at 5.6 million acres. And corn was up 3.2%, projected to be up 3.2% at 3.8 million acres. Good morning, guys. Kind of following up on yesterday, we had USDA report. By all means, really nothing overly eye-opening or changing in the fundamentals here. Based on that report, we're going to have crop insurance selections wrapping up here in a couple of days. So certainly that's on the forefront of everybody's mind if you haven't already made those selections. And then I think kind of one of the overhanging things on all the markets right now is what's going to happen with Friday's potential government shutdown, Friday late night government shutdown. So we'll have to see what happens there. We're looking for headlines. Dustin, maybe a few thoughts here to kick us off this morning, and then we'll throw around the room.
Thanks, Dan. Yeah, good morning. The USDA report yesterday was really not much of a change from the U.S. standpoint. U.S. numbers were all left unchanged. And there's not usually a big to-do in the March WASDE report. March planting intentions will be a much bigger report here at the end of the month. That's when all the surveyed information about what got planted, what is intended to plant, comes out, as well as the quarterly stocks. A few just weird things in the world numbers in corn. India's corn production was up 2 million. And so world less China carryout was actually left slightly higher. That's the number that we keep talking about. It's very, very tight. Chinese imports were going down another 2 million metric tons by the USDA's assumptions. So they're back down to kind of pre-COVID levels of like what you'd see, for imports for corn. 8 million metric tons what the USDA is projecting for old crop. Just to put it in perspective, they imported about 5 million metric tons of corn just in December 2023 alone. So a big shift in Chinese appetite for corn imports. And we've seen that in daily and futures as well. On the soybean side, we really no change there. The market's response was lackluster, as we saw. There was a slight reduction to price at the end of the day, but nothing crazy. I think we go into today, and these inflation numbers were rather light. So we've seen some pops in the outside markets, but you're still seeing some weakness in the currencies, like a strength in the dollar, weakness in the euro and the Brazilian real. So that might just have a slightly negative effect coming into the day.
Yeah, very good. Ben, what's on your mind this morning?
Yeah, I just think we're going to slop around in the range. I would think that prior to really getting into any significant planning in the Midwest, that there wouldn't be a lot of reason to take out the lows that we saw 8 days ago, whatever that was, maybe a week ago. And I don't think there's a whole lot to take this materially higher than yesterday's high, and probably just kind of a slim chop trade, in that range as this market tries to work its way out. The tariff news by the EU yesterday. Probably fueled a pretty poor close after making a new recent high on the recovery and finishing lower. So we'll see what today brings. I think we're going to be moving around, but I don't know if we're really going to be going anywhere.
It's interesting. You had a Russian missile attack in the Black Sea port of Odessa yesterday, and wheat just doesn't have any reaction. We're not seeing anything in the wheat market. Justin, saw Stats Canada this morning. I guess no major surprises, but any thoughts there? I guess it kind of falls in line with what we're trending towards here in a couple of weeks for planning intentions here in the States, I guess.
Yeah. There's nothing too exciting there, to be honest with you. I kind of agree. Just in general, the markets, like I think there's a big disconnect on what people in our industry, how we interpret news versus like the average person. I think the average person is kind of panicky over recession, how bad things are going to be, things like that. So I think that's what, you talk about this just money moving around. And I think there's going to be a point here soon where we're over panicking. And we've been talking about on the show, but there's trillions of dollars moving around, I think, getting to safe havens, and talking about the collapse in the stock market. To be fair, the last two drawdowns were just taking the S&P, for example. The last two drawdowns were 2022, like major drawdowns were 2022 and 2020. Obviously, we all know 2020 was COVID, the whole world shut down. Well, that drawdown was 36% from the high to the low. And 2022 was a 25% drawdown. We're sitting at 10% in the stock market. So, I think it's a narrative of, the world's falling, everything's, falling apart. Honestly, there's, to be a, kind of a normal move, we probably should go quite a bit lower in the stock market to just be normal. So I think we're overcooking a lot of things. Obviously, we talked about things are moving around, things are changing all the time. I think we're going to have a lot of things that happen pretty quick. I think the speed is just, we're not used to the speed. I think we're going to have an end of the, Russia-Ukraine war pretty soon. I think we'll probably have some resolution to Canada, Mexico. But that's just my opinion. I mean, I think we're just not used to the speed of change. So we'll see.
Yeah, nor is Washington.
Yeah, right. It's just not, when you have a bunch of business people come in and work on the government. I mean, think about going to DMV and be like write down everything that's wrong. Like, where do you start?
Yeah.
Like, start
everything.
with write everything that's right would be a shorter list, right? So I think you're just like kicking this big beehive that's been untouched for decades. So we're going to have volatility. We're going to have all these things, but at the end of the day, I think things are going to be good. So I'm not, to Ben's point, fundamentally, I mean, there's air gaps here. We've had a big drawdown. We had a big rally, but we're still the cheapest corn in the world. Fundamentally, nothing's changed, in my opinion, especially on the corn market. To go, maybe beans go make a new low, but we'll see. I still think, corn's got a good base. It's got a good fundamental base. We had the big flush out. Not to say that, if the funds decide they want to flip from long 200,000 to short, obviously we can go lower, but you're still the cheapest corn in the world. I think the USDA obviously punted, they're probably hoping that they go on vacation because we don't pass a spending bill, and they just decided to just market unchanged. I mean, we talked about that before the report. So yeah, I am just not a bear fundamentally from here. We can certainly go lower in prices because of outside markets, but I just think there's not a big, with crop insurance set where we are, and with all the policies you can buy right now, we're sitting at the floors. I mean, we're sitting at where corn and beans have a floor. I just don't see a big need to go sell a bunch of product here. So
I think the psychology aspect that you brought up of the equity markets and kind of the hyperbole in which it's broadcast with all the real-time social media and the news, I kind of look at it with a grin on my face because in the last 4 years, there's a tremendous amount of wealth created in the stock market. And I go back to, in days when it was really in that microcosm of the pit. And if one guy got hurt, it was kind of like, ooh, like people kind of knew it and they looked the other way. But as soon as everyone got run over, it was the end of the world, right? So playing into that, and I know not everyone has made a ton of money in the stock market, so I'm not trying to cast that blame, but a lot of people have done really well there. And it's like the turns are hard, and all of a sudden it's not just a money tree, right? So people freak out. But when it's en masse, it's everyone's a victim. And when it's just one person or a little bit here or there of this business, you're kind of like, yeah, it sucks. But it builds on the hyperbole of what's going on. And I think it can contribute to volatility, especially for people who can be super emotional about these things.
Yeah, and I have some friends that own businesses in other industries, and it's just the stark difference between what their intake of the information is versus what we intake.
Yeah.
And we're just so connected to like the markets and how they work versus like if you just turn on CNN, you would think you basically should just sell your company and move to Canada. Yes, so.
I don't know if I'd go to Canada yet.
Well, you might be back in the U.S. I mean, that's the problem, right? You just Greenland. I don't know. Pick it. But I just think that the general population, outside of like people that are connected to the day-to-day market moves, are told that everything's going to fall apart.
Yeah, it's kind of a sidebar, but a funny story. In 2008, when everything was melting down, my mother-in-law called my wife and said, I think I'm just going to get out of all my retirement stuff. And we're trading like 7,000 in the Dow. And I said, call your mom back and tell her to unplug her phone and don't even think about doing it. And her response was, what the hell does he know? Right? Like there's a time to be active and a time not to be active. And that was not a time to lose your nerve.
Right.
Well, I think to that point too, did you guys see that Bloomberg article that was making the rounds? Trade war won't be great for, won't make America farming great again. U.S. trade war will hurt farmer exports and increase agricultural trade deficit. Right. So anybody that didn't know that already, that's the risk.
Well, I was told,
right. And then saw that, I'm like, oh man, that's not good for corn prices.
Well, I was told yesterday by a buddy that is in a completely different industry how bad this is for farmers. And I'm like,
All right.
Literally, that's the space I'm in. But wanted to tell me, in case you didn't know.
All right.
So there's just a lot of.
Do you tell them that Trump loves the farmer?
Yeah, I just put my Gulf of America hat on and.
You tell them we're having fun. We're having fun. I don't know about you.
We're having fun. I don't know. You guys just.
Oh, very good. Got a couple minutes here, Rye. Cutout continues to kind of lead our pop in cattle, and it was interesting yesterday with hogs, kind of midday with Canada and US going back and forth. We kind of saw a break there, so still feels pretty tied to headlines. But what are your thoughts here this morning?
Yeah, I mean, the way that the cattle trade right now is setting up, really haven't seen too much yet. I think that's going to start to pick up here, and you got a pretty nice lead here in the futures, so we'll see. I mean, I think the expectation is to see 198, 199 maybe, especially just because beef was up 362 in choice, new high for the move. Select was just kind of flat, down 9 cents at 306.86. So I think that's really where the focus is going to be, just how this really shapes up for the week. Obviously, the WASI report came out and just kind of painted a pretty nice picture that domestic beef supplies are still going to be record large in 2025. So I think that kind of maybe fights the narrative a little bit, but on the other hand, the cattle market's still going to be worried about just how tight the actual supply of cattle really is right now. So obviously it seemed to just kind of level things off towards the middle of the day, but feeders back near contract highs, so I think now is kind of a good opportunity just to kind of look at those margins, look at what's going on. I mean, obviously the meats are going to be susceptible to headline trade and tariffs, mostly in the hog sector, but overall, I think that's something to be cognizant of going into today. On the hog side of things, yes, I mean, tariff news, headline trade is definitely leading the charge. I mean, we were lower yesterday, but cash was up $2. We're back up to 90.98. carcass was a little bit weaker. Belly's kind of taking it on the chin, down 346. So still just kind of watching the headlines. It feels like we had this really good move, and I think in general you're going to attract some producer selling here, no question about it, or at least some protectionary measures. So just seeing if cash can kind of keep the same trajectory that we're seeing. I don't think the report was really going to change too much. Just from the overall perspective, the reduction in pork production forecast by about 105 million pounds. I mean, I think overall the market's still expecting, kind of tighter supplies kind of going forward, and that production level to suffer. So that I think you didn't tell the market too much that it didn't already know. So we'll see how it shapes up today.
Hey, Ryland, just quick question, like, not being an expert in this at all, but what does tariffs, trade war, how does that affect the beef supply in general? Like, how do you fix that problem?
Well, I mean, like the beef situation is really going to get fixed, at least at this point, with the imports, and we've been seeing that. We've been seeing these, cattle imports kind of coming in from Mexico, from Canada. I mean, it's overall, we've been trying to kind of keep the beef imports, relatively high, just to keep retail prices at a point where they're just not going crazy. So that really is kind of the big solution. Otherwise, the overarching cycle in cattle is to retain breeding stock, to retain heifers. And we're at that price level where there may be some incentive to do that right now. So it's just a matter of when do those supplies start showing up into the market. And a calf that's born today isn't going to show up into the supply for 2 years. So I mean, like, that's why these things take so long. That's why the cycle is such a big deal. And generally you see this as you get to the tail end of the cycle, these ungodly prices, at the retail level. And then, as we've been seeing, producers and ranchers actually have some real profitability here, and everybody's worried about the bottom really falling out of it, just because now with feeder prices at 270, 280, I mean, the risk is in the back end of the market. If you're going to finish these animals out, we need to see those. If the market really wants to incentivize, expansion, it's going to need to either take that back price of the live cattle market higher to encourage everybody to remain profitable, or feeder prices are going to have to kind of find that equilibrium, from a finishing standpoint. And right now the feeders are really, they're, like I said, we're near record high prices. We're just knocking on the door of refreshing new contract highs. So, I mean, this is usually when people start getting nervous. It's a big break from these levels. So that's why I encourage anybody to kind of look at what options are out there, especially going out into the fall and those time frames that have a pretty big risk, just from a seasonal standpoint.
I would think a recession too, right? Beef would be hyper sensitive to a real recession in the economy.
Beef prices are generally very tightly correlated to wages, but I mean, I think at this point, if consumers keep spending, I don't think there's any fear of beef prices going lower or taking the cattle down with it. But that is always going to be a concern. It's just beef prices really haven't had a significant setback here in a long time, and consumers will absorb a lot of that cost. I mean, you get to a point where beef gets so expensive relative to pork and chicken that it starts eating into margins. We're starting to see that on, Tyson's annual some of their calls, that they're starting to see profits really start to suffer in the beef sector, but improve on those margins with their pork and their poultry margins. So, you kind of lose one, gaining the other two. It's just if those prices start to suffer and you see that those margins start to weaken, that's when you can really start taking beef prices down.
Have we seen relief in those other markets? Like you talk about eggs, chicken, just total protein. Have we seen the uptick in that? Where you can replace beef, for example.
Well, I mean, I think that right now it looks like pork is priced really strongly correlated to where the beef is, because we're at a price level right now. Just you look at a hog price. I mean, we're at prices that you would typically see in a summer market, in a really peak demand time frame.
Grilling season.
Right, during grilling season. So, I mean, we're getting to those levels. So, I mean, it just, obviously we're very inflated. The talk of the town really has been in the eggs, but I mean, go buy some beef, go buy some, chicken, go buy anything, on the retail level. And, I don't know if consumers are mainly looking for the deals. They're looking for the features. They're looking for the stuff that's on sale, so that's, I don't know if they're feeling the sting as much in those markets, but it's definitely something that should be of note.
Very good.
Very good. Good stuff, guys. Just came into the open. We got May corn down 8.5, 462 is the last. May soybeans are down 7 at 10.04 1/4. And May Chicago wheat's down 2 at 5.54 3/4. We got weekly export sales will be out tomorrow morning, 7:30 Central. We'll take a look and visit about that in the war room. Also, we're getting towards the middle part to the end of the month here in March through April 1st. Got a special offer for new folks that are looking to work with us here at AgYield. And we got a couple days left in crop insurance decisions. If you need a second set of eyes or looking for some different thoughts, please give us a call. We'd love to visit with you, how all that comes together and integrates in with marketing. That's our specialty. So let us know if you need some help there. Jack has more info in the outro. Also appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Subscribing doesn't cost anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.